So this is Gbpcad, is finally time. So assuming that is the beginning of the month, I always start by checking the monthly time frame. If it's the beginning of the month, so every start of each month I check and I plot my important zones for that month, and also to see where the trend is going. So if I think that, or if I see that the markets are in a bullish wave right now, or they are trending, there's a bull trend that's happening on the lower time frames, I would mostly look for buy setups than sell setups. And if the market is in a bear trend, a bear move, then I would look for sell setups more than bull setups. So I wouldn't hold my bull setups more, or if it's in a bull trend, I wouldn't hold my bear setups for long, because markets can do whatever they want but still push in the direction of the trend. That's what we have to. That's how people lose money. They forget that market will still move in the direction of the trend. So right now we have 1, 2, 3, 4, and this could be potentially 5. We only know if it's 5 when it breaks this low. So right now we don't know if it's 5, but we can anticipate it to be 5, or we can assume it to be 5. That's if you're looking at Elliott waves. Elliott waves. Okay, this low. So we have a consolidation here. So market is in a consolidation, and it was at the top at the end of last month, and right now it's moving down. So we might see price get all the way to the bottom of the consolidation. So I will put my zones so that I keep that in mind when I'm trading, or when price approaches those areas. So it's right here. As those are the most important areas, right? So some people like to use trend lines. I don't normally like to use a lot of things on my charts, but some people like to use trend lines, and I would put my trend line right here. As we all know, you always use the last two impulse. The last two impulse of the wave of your trend are the ones that validate your trend line, and that will give you your next entry. So if you're looking at Elliott waves, this would be the 1, 2, 3, 4, and potentially 5. We don't know that yet. We only know when this law is broken. When this law is broken and price keeps on going down, then we know that it is well sized. But right now, it could break above here and keep on going up the same way it came all the way down, consolidated, and then reversed. It could do the same thing around here. That's one thing you have to keep in mind. So this would be everything that I need for my market chart. And it was me only, this is it. But other people would prefer putting the rest of the zones, so that, like, I don't know, to just have them, and makes their chart look, like they did the work, like they tried. But this will be it for me. The rules that I have for zones, right? Always have less zones. Never have too many zones. If you have too many zones, that means something is wrong. That's one thing you should know. You should have equal or almost equally spaced zones. So if you look at my zones, right, this is the minor zone, this is the weekly zone, so don't mind it. But if you look at the monthly ones, right, so if you look at this area, and this area, it's almost equally or equally spaced. But this for me validates my zones. I know that my zones are fine if they are almost or equally spaced. Because if you have too many zones, you're most likely going to react on the zones that aren't valid and leaving the ones that are valid. And if you have too many, they confuse you. You have too many things going on. You have too many things that you're trying to keep in check. You end up doing the wrong thing. So that's why it's best to keep a few zones. So this will be for my monthly time frame. So I will know this when the monthly time frame reaches. But right now, we go on the weekly time frame. So on the weekly time frame, On the weekly time frame, most of the work is already done. The only other zone that I would keep in mind here is around this area. So this is a very important area. Why is this a very important area? This is a law that was created. And if price was to break this law, price will go all the way down here. But if it does break this high, last week, if it does break this high, price could get all the way up here and it might continue going all the way up. But this is an important zone because if price breaks here, then it's moving down very nicely. There is not much going on the left. It might make this similar move, but there isn't much going on to the left. So price could move pretty nicely when it breaks this low. So that's it for my weekly zones. I have nothing more to put. I'll only put this area. See, it's even in a consolidation. If you look at this area, it's been going up and down around this area. So this marks my consolidation. So if price keeps going down, we'll see. Then I go on my daily time frame. So the weekly time frame, you only look at the weekly time frame. I only look at the weekly time frame at the beginning of the week on Sundays. So on Sundays, I mark what I'm expecting from my markets. And when I know what I'm expecting from my markets on Sundays, I don't have to look at it every single day throughout the week because I have already marked my zone. So whenever price is about to reach there, I will know that this is my zone, this is what I've been waiting for. So I would keep on concentrating on the lower time frames, but in mind I know which areas is my weekly zone, so I don't have to look at them all the time, all the time. And now we're on the daily time frame. So on the daily time frame, you can look at it every single day when it closes, when the candle closes, so that you can mark your high and the low for that candle and you can look out for them the next day. It can actually help you really well to enter a really good trade. Like when the market breaks the high or the low, market can rally after that because they have broken the most important thing. So having that in mind, I will mark my important areas on the daily time frame. The only important area that I would look for on this daily time frame is this one. Now, the reason why I'm saying it's that one is because we all know we like these areas where prices came, touched, rejected, broke, came back, touched, rejected. So if we look at this area, price came way all the way up here, right? It came down, rejected, went up, came down, rejected, went up, came down, broke, came up again, rejected, came down, came up, rejected, then broke. Now it's coming down again. So we might see it rejecting here. So that's already a trade idea that I have in mind with one confirmation. A rejection here. Very strong zone. It's a support, it's a resistance, it's strong. So we might see it reject here. So I have that in mind. I'll keep that in mind. I'll even write it down in my journal for my weekly trades, just to remind myself when I'm trading during the week. So for those who like to use trend lines, we're on the lower time frames now, we're on the 4-hour time frames now. And these are the most important time frames for me, for people who like to take short trades. This is it. So what I would suggest, or what other people would do, they would put a trend line to mark their trend. Remember, if you look at our daily, we said market is in a consolidation. If you look at our weekly, we said market is in this consolidation, right? I'm gonna go on my 4-hour. Remember, I marked this area on the weekly. That means this is our low. This was our beginning of our trend. So I can put a nice trend line there, knowing that it's actually starting from my beginning of my trend that I'm looking at the moment. So I'll put my trend line right here. So this trend line, having that it's passing here on my zone, that creates confluence, that gives me a second confirmation of if I'm to anticipate a rejection here. That gives me a second confirmation for my trade. So I would say if I was trying to look at Elliott wave, or if I was using this information with Elliott wave. If I'm counting my wave right, I would have this. So this will be the beginning. 1, 2, 3, 4, and this could be 5. The 5 from there. Remember, we only know if it's wave 5 when it breaks the high. Whatever it does here, it will be wave 4 for us. But when it breaks the high, we know it's wave 5. So, using that Elliott wave, that's my third confirmation. Just knowing that will be my third confirmation, I would write it down. And also knowing that wave 4 should not get into the territory of wave 1. This is all the territory of wave 1. See, the high and the low. So this is all the territory of wave 1. So I would expect some rejection candles here. It can get into the territory of wave 1, but it has to reject that territory. So this I would look out for some rejection candles here when price gets here. So this is it for mine, but I don't use Elliott waves, so I don't keep it on the chart. For me, even the trend lines, I don't use trend lines, so I would actually remove the trend line. But just knowing that, having that information in my mind, I'm able to see when I'm seeing something. I'm able to have something that can confirm what I'm seeing and gives me confidence in what I'm trying to do, or what I'm trying to trade, or what I'm anticipating. So I don't have to panic. I know that it's correct because I have so many confirmations. I don't have to have them on the chart. They can confuse you, but the knowledge of having them and seeing it can be good confirmation. And if it works one time and if it works the next time, you know that it will keep on working as long as you do it correctly. So this is the next thing that I would do. I would put my high. I need my high right here, and I need my low right here. I always put the high and the low for that day in the 4-hour time frame. That will be my high and my low. So if I know that if price is to break here, then get the sweet short trade to the zone, the area of interest that I'm anticipating. Or if price keeps on going up, like it's been going up since this daily candle open, it's been going up. So if price is to keep on going up, I would want to see it reach this high for the 4-hour time frame. So I have my high and my low for the 4-hour time frame. So now I would move on to the 1-hour time frame. So on the 1-hour time frame, I would look for my highs and lows. So right now, since price has been moving up since the daily candle opened, I only have my low. So I look for minor zones, minor areas. They might get rejected for a while, but they can also get broken. They are minor areas. So what I would put my minor area is right here. It's an area of interest. If you are to put your zone all the way here, you see price came down and then rejected it, and then here it broke. It still came to retest it. So it's an area of interest. So if price is to come all the way up here, right, I would wait for it to break so that I can take the next trade up all the way here. This is also a minor zone. So if price was to break here, trade all the way here, I'll take my profits here, wait for price to break, and then enter again, aiming for this TP. And if price comes all the way up here, rejects, I would expect it to go all the way down. And if it breaks here, it's definitely going down to the area of interest that we discussed earlier on. But this would be it for me. This would be all of my zones. So these are the areas that will be very important to me when I'm starting a trade, my trading, or when I'm looking for a trade. That's on the 1-hour time frame. So sometimes when it's time for me to actually place a trade, or when things are going in my direction, if I see that price is moving in my direction as I anticipated and I'm expecting it to reject or break something, I use like 30 minutes to watch how the markets are doing. So this is it. My confirmation start here from 30 minutes. So if I'm to watch what market is doing right here, right, what I would say, right, market gave us a nice run up, right, and now it's consolidating around this area. That's my high and that's my low. So if I just woke up and it's time for me to trade, or my trading session starts now, right, and having all of that analysis that we did outlined, I would go on my 30-minute time frame and put my box right here, my range here. Price is been ranging here. That's my high and that's my low. I already know. So now I would say if price was to break the low, right, price would come all the way down here. But if price breaks this high, I would expect price to go all the way up to here. That's how I would do it. That's how I would set up my trade. So I would watch. Right now price seems like it's pushing down. Since our previous 30-minute candle closed bearish. It's not that strong, but knowing Gbpcad, it normally doesn't give us that strong candles, but yeah, it doesn't give us those big candles all the time. So it is selling pressure. Price could break the low. As long as it breaks this low, I'm expecting it to go all the way down. So I'll sell and having my TP and what it does there. And if it closes with bullish pressure like this candle right here, what if something is to happen and this candle ends up closing with bullish pressure like this one right here, I would wait until price breaks the high and then go all the way. I would expect price to break the high and then go all the way up here. That's where I'll take my profit. But right now it seems like it's gonna close bearish because it's only 8 minutes until the 4-hour candle closes. So right now I'm expecting the candle to close bearish. And if it does, it will be a good 4-hour bear candle. Yeah, it's not an indecisive candle though, but if I look at my 30 minutes and if it closes bearish, it is telling me to sell. So that's something I would look at. But if it doesn't close bearish and if it closes like this, it's a very good idea to wait for it to break this low or this high. Then I take my trade and I'm done for the day. So if I want to take another trade, if my strategy says I can take another trade, then I'll wait for price to see what price does around here or what it does around here. But yeah, that's pretty much it. Simple and straightforward. Not too many zones, not too much clutter, but the information about what's happening in the market, I have it in my head. I just don't need to put everything on the chart because that will confuse you. You have too many things telling you different things. Just know the things and wait for the market to validate it or invalidate it. And that's pretty much it.